Hello, Mr. Ruby, and welcome to the presentation of report from class CF14. And we will present about the Songhong Garment Joint Stock Company, which is also called as the MSH.
Okay, a little bit about Samhong Garment Joint Stock Company. It stands out as the leading exporter of garment and bag in Vietnam. Built on silk production, many large manufacturing branches are centrally managed in Nam Dinh province, taking advantage of the prime locations near the airport and seaport, ensuring effective logistic operation. So, okay, in terms of the operation models and subsidiaries, Samhong Garment has a strong strategy to develop its subsidiaries. On November 24, 2023, Samhong Garment officially started construction of Samhong Sunju Number 2 factory, creating stable jobs for more than 3,000 local workers, bringing the company's total labor scales up to more than 15,000 people. In terms of the organizational chart, as you can see in this company, the company has a chairman of board of directors, a general directors, and deputy general directors of other departments. In general, the leadership of some compartment trust company is an experienced and highly capable team. Among them, Mr. Bùi Đức Tịnh, current chairman of the board of directors, once held a position of general director in the period 1990 and 2022, and until now Mr. Bùi Việt Quang has assumed the positions of General Director of the company since 2004. In addition, the members of executive boards also include the financial officers and the head of audit committee. In terms of the business activities of and the project of this company, there are two main export methods is like the processed good and the exported goods delivered on board. In terms of the export good, with more than 30 years of construction and development, the company is currently a manufacturing partner of the major fashion brand manufacturers and retail chains such as with the brands like Nike or Converse, Levi's, and so on. In addition, the main product of the domestic sector are the product groups of blankets, sheets, pillows, and mattresses.
About the business size of this company, it has in total 12,000 employees, and the facilities include more than 20 factories and administration sites in the proximity of Nam Định province in the southern of Vietnam. And according to the economic papers that we can find online, the export turnover of Song Hong Company stood at the top of the list of more than 6,500 garment enterprises in Vietnam, and its exports to U.S. ranked the second in Vietnam garment industry as more than 200 million USD. About the finance and stock of Song Hong Company, it became the listed company on the stock exchange market, which is HOSE with the ticker symbol of MSH in 2018. So you can see here is the very updated stock price of the company. And its audit firm is called Grant Thornton Vietnam. So this company is among the top leading audit firms in Vietnam and also the world. About the business size of this company. So now I'm going to talk about Song Hong Garment Joint Stock Company balance sheet analysis. So first is about its total assets. So made Song Hong Company total assets show a stable trend over the 3-year period, with fluctuations in the compositions of current and non-current assets. While the percentage of total current assets decreased slightly from 2021 to 2022 before increasing in 2023, the percentage of total non-current assets experienced an opposite trend. The next part is about liabilities and owner equity. So total liabilities and stockholders' equity demonstrate dynamic changes, reflecting shifts in short-term and long-term debt financial obligations. The percentage of total current liabilities decreased, indicating potential improvements in managing short-term debt, while the percentage of total non-current liabilities increased, reflecting a rise in long-term debt or obligations. Meanwhile, the total stockholders' equity steadily increased, highlighting MSH's ability to generate profits and retain investor confidence.
Next, I will provide an overview of the financial performance of May Song Hong and Tan Kong from 2021 to 2023. So let's begin with the year 2021. At that time, May Home showcased stronger management of short-term liabilities and more financial flexibility than Tancom. And May Home's total current assets made up 77.73% of its total assets, highlighting a focus on liquidity. In contrast, Tancom's current assets stood at 65.2%, suggesting a greater emphasis on long-term growth and stability. Interestingly, both companies had similar percentages of total current liabilities, around 47 to 48%, which indicate a shared approach to managing short-term obligations and financial risk. And next, in 2022, both companies experienced a decline in their total current assets proportions, while their investments in long-term resources, such as property, plants, and equipment, increased. Mason Home's total current liabilities decreased to 38.53%, whereas Tancom's declined to 37.73%. This shift implies both companies were managing their short-term financing better, and Mason Home's total non-current liability increased to 9.29%, suggesting it took on more debt to finance growth, potentially impacting for future cash flows. Meanwhile, Tancom's owner's equity reached 56.91%, indicating a strong equity position and lower financial risk. So, moving on to 2023, both companies focus on more on liquidity and less on long-term investments. Mason Home's capital structure remained stable and suggesting a consistent financing strategy in line with its long-term goals. This stability implies a steady risk profile and predictable financial performance. In contrast, Tancom show significant changes in its proportions of total liabilities and owner's equity, reflecting improvement in its financial health.
So my turn is about income statement analysis. So my somehow total revenue exhibited a fluctuating pattern over the 3 year period, with a peak in 2022, followed by a decline in 2023, though still showing an overall increase compared to 2021. So in 2022, total revenue rose by 70.59% compared to 2021, driven by strong order from the US and the EU, although growth slowed down toward the year's end due to high inflation in key economies. In 2023, MSH saw a decrease in total revenue and operating revenue compared to 2022, but still slightly higher than 2021. This decline was attributed to global economic recession and political instability affecting the garment industry, leading to net revenue decrease for MSH. So next one is the comparison of total revenue of MSH and TCM. So both two companies experienced similar fluctuation in total revenue over the 3 year, but may somehow consistently maintain a higher total revenue throughout the periods. And next one is the cost of goods sold. So Mason Home experienced fluctuating figure from 2021 to 2023. In 2022, cost of goods sold are 22.9% increase from 2021, largely due to a global shortage and supply chain disruption. So in 2023, cost of goods sold decreased but remained higher than 2021. Reducing cost of goods sold could improve Mason Home financial performance and profitability. And next one, over 3 year period, may somehow consistently maintain a higher cost of goods sold percentage compared to May Thành Công. However, by 2023, the disparity between the two narrowed, with May somehow cost of goods sold still slightly surpassing TCM. So may somehow rising cost of goods sold over the years can be attributed to factors that increasing raw material and labor expenses, expanding operation, and inflationary pressure. Despite the change, NSH has sustained profitability as its revenue has grown slightly faster than its cost of goods sold each year.
In 2020, MSH had the highest total expense before income tax, estimated at roughly 5.2 billion Vietnam dong. They have explained that due to the initial operation of the New Hưng factory of MSH, which raised revenue but had higher input costs. And this is the common sign analysis that was conducted using the proportion of net revenues when comparing with MSH competitor DCM. As you can see, MSH has better cost and resource management abilities than TCM in 2021, but the performance of the next 2 years may be the result of global inflation and as well as supply chain interruptions and container shortages have prompted raw material costs to rise. In 2020, MSH earnings per share broke significantly by 63.15% to 32.60 compared to much higher value of ITA46 in 2021. MSH sharply lowered earnings per common share in 2020, raised concerns about their profitability. This might affect their ability to pay dividends and invest in the future growth. Earning per common share is the key financial term used to assess a company's profit-generating capacity. It's easy to see that despite MSH earning per common share experienced a concerning downward trend for the past 3 years, the company might still hold an advantage over competitor DCM in terms of attractiveness for investors.
The debt-to-asset ratio for Samsung remained relatively stable over a three-year period. In 2021, Samsung witnessed a significant rise in its total liabilities, explaining the highest percentage of debt-to-assets in 2021. In the following year, due to the surge in international order and expansion of production, Samsung saw a decline in the debt-to-asset ratio. In terms of comparison, while Samsung experienced a stable ratio for three consecutive years, Tancom saw a declining trend starting at 0.53% in 2021 and further dropping to 0.39% in 2023, indicating that Hong Kong is efficient at resolving debt and significantly boosting the asset compared to Samsung. In this graph, we can see that Samsung witnessed a significant decline in their debt to equity in 2022, indicating that they're enhancing their equity by investing in BASF logistics company. Nevertheless, in comparison to its competitor, Tencom managed to drastically reduce its debt to equity ratio to 0.63% by 2023. For the graph, we can see that both companies are witnessing decline in their profit. For Samsung, they reached 5.40%. For Tencom, they got only 4.2%, which is extremely low compared to previous year. This is because the ongoing zero COVID policy in China causing the price of material to increase. Furthermore, the escalation of global inflation also contribute to increased price for goods and labor, further causing the final strain on the companies. In this graph, Samsung saw a decline trend while its competitor fluctuated slightly and somehow start at 14.45% in 2021. In 2021, Samsung started at 13.81% of return on asset. However, this dropped significantly in the next few years to only 7.1 in 2023. And the reasons for is that Samsung has been grappling with persistent shortage of demand and order from its customer base, resulting in a sharp decline in recent years. Furthermore, the significant increase in material costs also play a pivotal role in notably decrease in the company revenue. About its competitor, Tencom is saw an increase in 2022, however, then decreased to 4.08% in 2023. About the return on equity graph of Samsung, this is also quite the same as its return on asset graph. Both graphs indicate a declining trend in 3 years and reaching 13.53% in 2023. And about its competitor, they witnessed a significant fluctuation. Overall, Samsung experienced an upward trend in three consecutive years and reached 11.33% in 2023, indicating that investors are willing to pay a high price for company stock relative to its earnings. This is because Samsung achieved a notable 47% increase in their net profit in the fourth quarter of 2023, and Samsung BSF Logistics also making significant profit. These positive developments likely to contribute to the growing investor confidence in the company's future earning potential, resulting in the rise of PE ratio. However, when compared to its competitor, Cancom, Samsung growth in PE ratio appear relatively low. Overall market-to-book ratio fluctuated over 3 year period, while its competitor Tencom witnessed a decline and reached 1.88 in 2023. However, this is still higher than Samsung. They often only 1.50% in 2023. And the data reveal a downward trend in market capitalization's growth for Samsung over the observed period, declining from 29.58% in 2021 to 13.55% in 2023. This means that Samsung is facing challenge in producing profit and maintaining its reputation toward its competitor, making it less attractive and reliable. As a result, Samsung experienced a significant decrease in its market capitalizations. Meanwhile, its competitor Tencom also saw a decline and reached only 6.66% in 2023.
When it comes to the liquidity ratios of this company, it has been increasing over the past 3 years, indicating improvement in short-term liquidity. That means that the MSH has more current assets like inventory and receivables to cover its short-term liability. Why this company ratio is improving, its competitors has a significantly higher current ratio in 2023, suggesting that the competitors, that is the TFCM, manage working capital more effectively and has more cash reserves. About the quick ratios of the liquidity ratios of the Home Garden company, like its excludes inventories from current assets, has also shown that an upward trend, increasing from 0.91 in 2021 to 1.25 in 2023. This indicates like better short-term debt management in its most liquid assets. Its competitors, Tancom Textile Garden Investment Trading Trust Company, is higher in 2022 and 2023, suggesting that it has like an advantage in this area. Regarding the cash threshold of Songham Garment Company, why it has a growth slightly from 2021 to 2023. It suggests a limited improvement in short-term cash flow, and this means like Songham Company likely relies on other sources like loans to fund its business activity more than the Tancom Company. And how about the efficiency ratio? First of all, in terms of the assets turnover ratio, from 2021 to 2023, some apartment company assessed turnover ratio has higher than the competitors, better asset management, but has been declining recently. This suggests that some apartment might be struggling to use some assets efficiently in the current market. Some government still seems to be better at generating revenue from existing assets than the telecom company, although both companies appear to be facing challenges in this area. An interesting story about the inventory turnover ratio of this company is like it has improved market come from 4.17 in 2020 to 7.17 in 2023, which over indicates a significant increase in inventory efficiency. Influenced by the COVID-19, starting from 2021, the garment industry had progressed by 3.3% compared to the same period in 2020. Many businesses in this industry have orders even until the end of the year. This shows that the efficiency of the inventory consumption has been promoted, and moreover, a significant decline in inventory level from 2021 onward, speaking at the more than 900 billion in 2021, and then falling to more than 500 billions in 2023 is a good sign that an important factor causing the inventory turnover to increase. Okay, so some government collect payments from customer faster than a telecom company. However, both companies show like limited improvement in this area. The insignificant year-to-year difference in revenue turnover may stem from the consequence of the COVID-19 pandemic. This could be due to the number of factors, including errors in the receivable collection process applied in the Sohan Garden from the 2019 to present. Until present, inadequate credit policy or consumers' inability to pay. Payment by financial sources or credit. Although the ratio is higher than that of the competitor and company in general, the two companies are like both struggling to achieve higher receivable turnover.
So we come to the forecasting of the financial conditions of this company in the next 3 years, 2024, 2025, and 2026. And outflow in this forecasting is that we will analyze the income statement first, and then we move to the cash flow statement, and lastly is the balance sheet in which we sum up all the things that we have forecasted. And in this income statement, you can see the three main points that we would like to focus here is the net sales growth, the cost of goods sold over the revenue, and the income tax expenses. And in 2023, you can see that the company witnessed a net sales drop, and this drop is according to the export values of the whole garment industry of Vietnam being dropped by 10% according to Vietnam economy. And in 2024, the industry expected to get a growth again, and like being witnessed by many other companies within the industry, like TCM, which is a company at the front segments of the garment value chain. They expect to have a 13% growth in the net sales in 2024. However, MSH is of a backtrend so that the regaining growth is expected to be lower. So that's why we predicted it at 11.5%. And in 2025, MSH is expected to run the new factory, which is now being constructed, according to the news. And the factory aims to increase the overall productivity by 17%. That's why we have a drop of cost of goods sold over revenue from the 2024 to 2025. And lastly, 2026, we will expect to have a regaining growth in the whole industry. So that's why it has a very increase in the net sales growth.
cash flows. We started with the profit before taxes, since MSH existing structure requires it. The acquisition of buildings, machinery, and other assets, which constitute capital expenditures, provided by the basis of estimating the company's capital expenditures. To determine it, we employ a historical revenue-based approach. This involves calculating the average capital expenditure to revenue ratio for the preceding 3 years by using the linear regression. The regression shows that the capital expenditure to revenue ratio has the greater increasing trend in the upcoming years and may shift from negative to positive in the future. In the evolution of account receivables, short-term and inventories for the forecast this year, a meticulous calculation approach was employed. The figures for the year under consideration subtract those of the previous year, with the resulting change designated with a negative sign. This method provided insight to variation in short-term receivables and inventories level. Similarly, for the assessment of account payable to suppliers, the same calculation is applied, yet without incorporation of a negative sign into the results. Notably, the substance of proceeds from bond issuance and borrowings over the past 2 years are poised to drive a significant increase in financial cash flow over the next 3 years. And finally, we finalize the pro forma cash flow statements in here on this slide. And subsequently, the receivable turnover was calculated by dividing the cost of sales by the average accounts payable, leading to an average accounts receivable day figure of 55. Using these metrics, inventories were determined by applying the calculated average days divided by 365 and then multiplying the results by the cost of sales for each respective year. Total assets are expected to grow significantly, reaching over 3,300 billion Vietnam dong by 2026.
And that's for the assets. Now comes the liabilities and the shareholders' equity. So you can see here most of the figures go up instead of going down. However, the percentage of changes is not much, and we can say that it is a steady growth in the liability and also the equity of the shareholder. So now I'm gonna talk about the scenario analysis. Here the best case scenario in the calculation we have calculated from the forecast data. The reason for this case is the Xuân Trường 2 factory project by Sông Hồng Garment Choice Stock Company is set to commence operations by the end of 2024, and the financial institutions anticipate the factory reaching full capacity by 2026, projecting it to contribute around 20% of Sông Hồng Garment's yearly revenue. This project represents a milestone for the company, marking its most comprehensive endeavor in its 35-year history of gradual growth and development. Next is the base case scenario. Here the calculation and the chart that we have calculated. So the company exported goods every year, and currently the U.S. market accounts for 95% of Sông Hồng Garment annual export revenue, and the company is trying to overcome difficulties in the textile industry. However, it is expected that from the fourth quarter of 2023 onwards, the order situation will be more favorable. Sông Hồng Garment currently has healthy financial health. So the last case is the worst case scenario. Here the calculation and the chart that we have drawn. So Sông Hồng Garment Stock Company is planning for a double-digit negative growth, and at the annual general meeting, the pre-tax profit target for 2023 was agreed to be reduced by 20%. The company stated that due to decreasing demand and unfavorable global shifts in the textile supply chain, the plan is somewhat modest.